couple of weeks ago, I posted a video on the case for gold and silver. You can find that video in the description box below. I posted this chart up showing the silver price against US CPI and the 10-year yield. And the basis for my argument was rising inflation and the similarities that we're having right now with the 70s when US inflation was in double digits. Whilst this is still the case, with headlines like this confirming inflation remains a problem, you can see US CPI last month came in at 7.5% year on year. However, the uncertainty around Russia-Ukraine has accelerated this upward momentum in safe havens like gold and silver. If we look at the weekly chart, we can see price heading towards the upper end of this channel. I mentioned in my last weekly note that we could be heading towards 1910 to 14 before any kind of profit taking occurs, and we're firmly on track for that. If you want to receive my free weekly note straight to your inbox, you can find the link to my site in the description box below. Now, although gold may pause at this area, the bulls are firmly in control as prices move firmly away from the 200-day moving average, which sits around 1800. If we do get into panic buying mode as a result of Russia moving into Ukraine, we could see 1958 to 60 on gold. Beyond that, and the all-time highs around 2075 is the next major resistance level. The setup on gold looks good from a technical point of view. This chart we have in front of us is one bullish flag pattern which began from March 2020. The same can be said for this chart, which I showed in a previous video. Although silver has been moving sideways, it too is putting in a bullish flag pattern, as I've highlighted here, and if history is to go by, will move to the upside following inflation and rates higher. In fact, you can see from this gold chart against the 10-year yield that the narrative about high yields being a bad thing for gold is no longer the case, as the 10-year yield has remained around the 2% mark, whilst gold has climbed, which shows the market is coming to terms with gold as a beneficiary of higher rates due to inflationary pressures. Let's take a quick look at the Nasdaq 100. Now, this is the daily chart. To recap from a couple of weeks ago, I highlighted how the Nasdaq 100 confirmed its breakdown on the 4th of January this year, making a lower high and breaking the key trend line you see here in green. I also mentioned that as long as price is below 15,330 to 350 area, the Nasdaq is just back testing its breakout, which you can see here as price collapsed just below the 200-day moving average. Another concern for bulls was the shorter time moving averages like the 20-day and the 40-day. Both moving averages were pointing lower, which I noted was a signal for further selling to come. What we've had this week is further weakness, but notice we've had the 40-day moving average in blue acting as resistance. This week, price can't even hold the 20-day moving average, which is now holding as resistance. That's the pink dotted line. In terms of downside levels to watch, a retest of the recent lows looks inevitable around 13,720. Look for a reaction there to see if dip buyers come in. If not, price heads lower to 13,590. Below that, and we get a flush towards 12,900 to 13k, that being the next big area of support. With that said, remember to hit that subscribe button so you don't miss future content, and I'll see you at the next one.